Sometime in the last year, you probably heard that Social Security is no longer taxed. Maybe it was an email that looked official, maybe a headline, or a neighbor at church who was sure of it. They finally ended the tax on Social Security. And if you're on Social Security, that is a big, hopeful thing to hear. So let's do the honest thing and actually check it, because the claim is not quite true and it's not quite false. Here's the short version, and then I'll show you exactly where it came from and what it means for your check. Social Security is taxed in 2026 the exact same way it was in 2024. Nothing about that rule changed, but a real, separate tax break for seniors DID pass, worth up to $6,000 a person. And a lot of people who qualify for it have no idea it exists because they're waiting on a no tax on Social Security benefit that was never actually the thing that passed. I'm Jeffrey. On this channel, we do the honest version of retirement money. The actual IRS and Social Security rules, what's real versus what got oversold, and the one specific step that turns a confusing headline into dollars you keep. So here's the deal for the next 20 minutes. First, the exact claim and where it came from. No spin, just what was said. Then what the 2025 law really did, in plain English. Then the real $6,000 break. Who gets all of it? Who gets part of it? Who gets nothing? And the quiet catch that could actually cost you if you believe the headline. And you'll meet 3 people, all 65 or older, sitting at the very same news, where it goes 3 completely different directions. One of them is basically you. And before we start, let me name why this one fools so many careful people. Because it's not carelessness. When a message arrives that sounds official and says something you badly want to be true, you don't fact-check it. You feel relief, and you move on. That's human. The trouble is that we cut your taxes and we ended the tax on Social Security are 2 very different sentences, and the space between them is where the confusion lives and where a little money quietly goes unclaimed. So today is just this: the claim, the rule, and the one thing to check on your own return. No fear, no politics, no sides. Let's start with exactly what was said. Here's where it came from. In 2025, when the big tax and spending law passed, some official messaging, including an email that went out to Social Security recipients, described it as eliminating federal income taxes on Social Security benefits for most beneficiaries. That's a real quote, close to it, and you can see why it landed the way it did. Eliminates federal income taxes on Social Security. Read fast, that sounds like, my Social Security is no longer taxed. Independent fact-checkers looked at that wording and flagged it as misleading, not because nothing happened, but because what happened wasn't a repeal of the Social Security tax. So let's separate the 2 things that got blended together. First, the part that did not change at all. And this matters, because if you believe it changed, you might stop doing something you should keep doing. The rule that decides how much of your Social Security is taxable is exactly the same today as it was before the law. It works off something called your combined income. That's your other income, plus half of your Social Security. And depending on that number, either none of your benefits are taxed, up to half of them are, or up to 85% of them are. Those brackets did not move. They haven't moved since the 80s and 90s actually. They're not adjusted for inflation, which is why more retirees drift into them every year. The 2025 law left every bit of that untouched. And here's why this claim was so easy to believe in the first place. A lot of retirees feel taxing Social Security is unfair. You paid in your whole working life, now it gets taxed again. So they finally ended it, sounded exactly right. The history, in one breath. Social Security wasn't taxed at all until 1983. Then up to half of it became taxable. And in 1993, the up to 85% tier was added. And the quiet part. The income lines that trigger all this, 25,000 single, 32,000 for a couple, were never adjusted for inflation, not once. So every year, more ordinary retirees drift across those frozen lines and find part of their check taxed for the first time. That creep is real. And the 2025 law didn't touch it. Which brings us to the actual question. If it didn't end the tax, what did it do? So when someone says they ended the tax on Social Security, the precise, honest answer is, no, they didn't. If 85% of your benefit was taxable last year because of your income, 85% of it is taxable this year, under the same math. Nothing about Social Security itself was carved out of the tax code. I want to be really clear about that, because it's the half of the story that got lost. And because a retiree who hears no tax on Social Security and turns off their tax withholding could get a genuinely unpleasant surprise at filing time. Keep withholding what you are withholding until you've actually checked your own numbers. We'll get to how. And here's the part that makes this understandable instead of embarrassing, because a lot of careful people believed this, and they're not fools. Ending the tax on Social Security wasn't a rumor somebody made up. It was a real proposal. It was genuinely on the table while the bill was being written, talked about openly, promised out loud. But when the bill went through the Senate, that specific piece got stripped out because it ran into the Senate's own rules about what can and can't go into that kind of law. So the repeal was proposed, then removed, and then the messaging that went out described the law as if the repeal had survived. That's the whole trick of it, and it's why this fooled sharp people. It wasn't invented from nothing. It was a real promise that didn't make it into the final text, described afterward as if it had. When you hear a claim that feels almost true, that's usually the shape of it. Something real that got bent one notch on the way to your inbox. Now the other half, the part that's genuinely good news, and the part fewer people are actually using. The same law created a brand new deduction, just for seniors, $6,000 per person who is 65 or older. If you're married and you're both 65, that's $12,000 off your taxable income. It is real, it is on the books right now, and it runs from the 2025 tax year through 2028. It is not a check in the mail, and it is not the Social Security tax going away. It's a deduction. It lowers the income you get taxed on. And for a lot of retirees, that quietly does much of what people thought the headline promised, just through a different door. Now, it's a deduction, not an exemption. Sounds like tax lawyer hair splitting. So let me turn it into real money, because the difference is the whole video. An exemption of Social Security would mean, take your Social Security check and don't count it as taxable income at all. That's what the headline made people picture. A deduction is different. It lowers the total income you get taxed on, from whatever source. So imagine two versions of the same retiree. In the version the headline promised, their Social Security simply isn't counted, period. In the version that actually passed, their Social Security is still counted exactly as before, but they get to subtract $6,000 from their total taxable income. For a middle-income retiree, those two can land in a similar neighborhood on the final tax bill, which is why the claim felt close enough to true. But for someone whose income is high enough that the deduction phases out, the promised version would still help, and the real version helps zero. Same words, very different math, depending entirely on your income. Let me make this concrete with three people. Meet Helen. She's 67, single, retired from a county job. Her income is modest, a small pension, and her Social Security, adding up to somewhere around $38,000 a year. When Helen heard no tax on Social Security, she assumed it didn't really apply to her because she wasn't paying much tax anyway. But here's what actually happens for Helen. She's 65 or older, she's under the income limit, so she gets the entire $6,000 deduction, on top of her regular standard deduction, on top of the extra standard amount seniors already get. 3 layers, stacking. For Helen, that $6,000 is real money off her taxable income. And she almost skipped it because the headline she heard was about the wrong thing. And I want you to see how it stacks, because this is where people leave money behind. There's the regular standard deduction everyone gets. Then there's an extra standard amount that people 65 and older have gotten for years. And now, on top of both of those, this new $6,000 senior deduction. They don't replace each other, they add together. For a single person like Helen who's 65 plus, the standard deduction, plus the senior add-on, plus this new $6,000, comes to a little over $23,000 of income that never gets taxed at all. That's the number worth knowing. Not Social Security is tax-free, but here's a real stack of deductions, and one brand new layer you have to make sure gets counted. And let me answer the question you're probably asking about Helen. Okay, $6,000 off her taxable income. What's that worth in actual dollars? This is where people undersell it or oversell it. So here's the honest way to think about it. A deduction saves you your tax rate times the deduction. For a retiree in Helen's range, that's usually the 10 or 12% federal bracket. So $6,000 of deduction saves her somewhere around $600 to $700 in actual tax. Real money, roughly a month of groceries, for filling in one section of a return correctly. Now, is that Social Security is now tax-free? No. But it's also not nothing, and it's not hypothetical. It's a few $100s that stays in Helen's account instead of going to the IRS every year through 2028, as long as she remembers to claim it. The tragedy would be Helen hearing a headline about a benefit that doesn't quite exist, and in the confusion, missing the one that does. Now, the catch. And this is the number to be precise about, because it's where the deduction quietly shrinks. The full $6,000 is there if your income is under $75,000 for a single person or $150,000 for a married couple. Above that, it starts phasing out. For every dollar you're over the line, you lose 6 cents of the deduction, and it's completely gone once a single filer is over $175,000 or a couple is over $250,000. So this isn't a break for everyone with a Social Security check. It's a break aimed at middle-income retirees, which, to be fair, is most retirees, but not all. Which brings me to the second person. Meet Ray and Diane. They're 71, married, and they did well. A couple of pensions, some investments, income that lands around $270,000 a year. When the no tax on Social Security news came out, Ray was pleased. He figured it was one more nice thing for people like them. But for Ray and Diane, the honest answer is, this particular deduction does nothing. They're over the $250,000 line, so the senior deduction is fully phased out. 0. And the Social Security tax the headline talked about? 85% of their benefit is still taxable, exactly as before. Nothing changed for them, in either direction. For higher income retirees, the no tax on Social Security story was the emptiest, a headline about a benefit that phases out right past their door. And the third person is the one I worry about most, because he's the most common. Meet Walter. He's 66, single, and his income lands around $90,000, a decent pension, some withdrawals, his Social Security. Walter heard no tax on Social Security and did a very reasonable thing. He called his benefits office to ask about turning off his tax withholding, because why keep paying tax on something that's supposedly not taxed anymore? Here's Walter's real situation. He's over the $75,000 line, so his senior deduction is partly phased out. He's $15,000 over, so he loses $900 of it and keeps about $5,100. That's still a nice break. But his Social Security, at his income, up to 85% of it is still taxable, just like before. If Walter had turned off his withholding on the strength of that headline, he'd have walked straight into a tax bill next April. So Walter's the lesson for everyone in the middle. He did get something real, about $5,000 of deduction he should absolutely claim. But he did not get what the headline promised, and acting on the headline instead of the rule would have cost him. The move for Walter isn't to stop withholding, it's to make sure his tax preparer or his software actually applies the new senior deduction on his return, and to leave his Social Security withholding alone until he's run the real numbers. Same news, 3 people, 3 completely different right answers. Helen claims a full $6,000 she almost missed. Ray and Diane get nothing and lose nothing. Walter gets a partial break, but would have been burned if he'd believed the slogan. Since Walter's worried about his Social Security being taxed, let me show you how that number is actually built, because once you see it, you can check your own in about 2 minutes. It runs off something called combined income, and the recipe is simple. Take all your other income, your pension, your withdrawals, any work income, then add just half of your Social Security benefit. That total is your combined income. So take a single retiree getting $24,000 a year in Social Security and pulling $30,000 from a traditional account. Half of the Social Security is $12,000. 12 plus 30 is $42,000 of combined income. That's well over the $34,000 line for a single filer, so up to 85% of their Social Security is in the taxable range. Notice what did and didn't just happen. The 2025 law did not change that $42,000 calculation, or that $34,000 line one bit. What it did was hand that same retiree a separate $6,000 deduction to lower their overall taxable income. 2 different levers. The headline collapsed them into one, and that's the confusion in a single number. And here's the practical part, because a deduction you don't claim is worth exactly nothing. This new senior deduction is claimed on your federal return. For the 2025 tax year, there's a specific new schedule for these additional deductions that came with the law. The good news, you don't have to itemize to get it. Whether you take the standard deduction or itemize, this stacks on top either way. If you use a tax preparer, the one sentence to say is, please make sure the new senior deduction from the 2025 law is applied to my return. If you use software, look for the new senior or additional deductions section and confirm your age and income are entered correctly, because that's what unlocks it. It's not automatic in the sense of a check arriving, but it is simple once you know to look for it. And couples, this works a little differently for you, in your favor mostly, so let me spell it out. If you're married and you're both 65 or older, it's not $6,000. It's $6,000 each, $12,000 off your taxable income together. And your phase-out lines are higher too. The full amount holds until your income reaches $150,000, and it doesn't disappear entirely until $250,000. So a married couple in their late 60s with, say, $120,000 of income gets the whole $12,000, a real meaningful subtraction. There's one requirement I want to flag for couples, because it trips people up. To get this deduction, you have to file jointly. If you're married and you file separately, you don't get it at all. For most retired couples, filing jointly is already the normal choice. But if you'd been filing separately for some reason, that's worth a conversation with your preparer, because it directly decides whether $12,000 of deduction is on the table or off it. Let me come back to the withholding point, because it's the one that turns a good news headline into an actual bill, and it deserves its own minute. A lot of retirees have taxes withheld from their Social Security on purpose. You fill out a form, the W-4V, and Social Security holds back 7, 10, 12, or 22% of each check for taxes, so you're not hit with a big bill in April. Now picture what happens when someone hears Social Security isn't taxed anymore. The natural move is to file a new form and turn that withholding off. Why give the government money on something that's not taxed? But we just saw that the tax on Social Security didn't go away. So the check gets a little bigger each month, which feels great, right up until filing season, when the tax that was always owed shows up with no withholding to cover it. Plus, if it's large enough, an underpayment penalty on top. So please hear this clearly. A headline is not a reason to change your withholding. Your own combined income is. If you want to adjust the W-4V, do it because you ran your numbers, not because of something you read. Two more honest catches, so you're not surprised later. First, it's temporary. This runs through the 2028 tax year. Unless a future law extends it, it goes away after that. So it's a use-it-now break, not a permanent feature of retirement. Second, and I'll say it one more time because it's the heart of this whole video, it is a deduction, not an exemption of Social Security. It lowers your taxable income. It does not make your Social Security tax-free. If your combined income puts you in the taxable range, your benefits are still taxed on the same schedule they always were. Believe the rule, not the slogan. The rule is actually pretty good to you. The slogan just wrote a check the law didn't sign. So let's answer the question in the title honestly. Did they end the tax on Social Security? No. That tax works exactly as it did before. Was the claim a total lie? Also no. A real, meaningful tax break for seniors did pass. And if you're 65 or older and under the income limits, it's genuinely worth money to you. The honest verdict is misleading. The headline oversold a deduction as a repeal. And the people it hurt weren't the ones who got the break. They were the ones who heard no tax on Social Security, assumed they were covered, and either skipped the deduction they qualified for or turned off withholding they still needed. One more source of confusion worth clearing up in 30 seconds because it gets tangled into this. Some people who say, my Social Security isn't taxed, are actually right, but for a completely different reason. Most states do not tax Social Security benefits at the state level, and a handful have been dropping their tax on it in recent years. That's a state decision, and it has nothing to do with the 2025 federal law we're talking about. So you can have a retiree in one of those states who genuinely pays no state tax on their Social Security, hears the federal headline, and now believes they pay no tax on it at all, while the federal tax is quietly still there. Federal and state are two separate systems. The 2025 law is federal. If your state doesn't tax Social Security, that's a real and separate break. Just don't let it blur into thinking the federal tax disappeared, because it didn't. So here's your short list for this week, and it's genuinely short. 1. Figure out if you're 65 or older by the end of the tax year. For the 2025 return, that means born before January 2nd, 1961. 2. Find your income number and see which side of the phase-out you're on. Under 75,000 single or 150,000 married, you're in line for the full amount. Above the top lines, 175 and 250, you're out. 3. Make sure whoever does your taxes actually applies the new senior deduction. Don't assume the software caught it. And 4, the one that saves people from a bill. Do not stop your tax withholding just because you heard Social Security isn't taxed. Check your own combined income first. Those 4 take an afternoon, and for a lot of you, one of them is worth thousands. If this cleared up something you'd half heard and weren't sure about, that's exactly what this channel is for. The real rule, calmly, with the one step that turns it into money. I've got a full deep dive on that $6,000 senior deduction, every eligibility detail and the worked examples, and a separate one on exactly when and how your Social Security gets taxed, both linked right here and in the description. If you found this useful, subscribe, because I put out one of these a week. One confusing retirement headline, checked against the actual rule, so you always know what's real and what's just loud. Next time, we're looking at where you retire and how your state can tax your retirement income very differently. I'm Jeffrey, and when the next big headline comes, and it will, remember the one thing this whole video was really about. Check the rule, not the slogan. One important note. This is educational only, not personal financial advice, and not tax advice. The numbers here, the $6,000 deduction, the $75,000 and $150,000 phase-out lines, the 50% and 85% Social Security brackets, are the 2025 law and current IRS rules, but your situation is your own. Run your real numbers or check with a tax professional before you change anything on your return or your withholding.